It's right at 1 o'clock, and we're going to go ahead and get going. But first, I have a few, housekeeping items to go through. Firstly, on the right-hand side in the GoToWebinar control panel, there's a questions area and a chat. Feel free to ask questions. We're going to try to get through all the questions today on the webinar through a Q&A. But if we don't, I'll follow up and we can talk through the questions that you have. Next, we are sending out a follow-up email. We normally have a link to the recording of the webinar, PowerPoint presentation as a PDF, and an appetite guide, as well as we have a pretty cool reference for payroll thresholds and things like that. So let's get started. In 2018, Stuckey & Company celebrated 27 years as an MGA, offering our agents access to solid A-rated carriers like MetLife, Hartford, Safeco, Travelers, and Chubb, to name a few. We have what's called a 151 promise, and that's if a complete submission comes in at, before 1 o'clock, we get it out by 5, in by 5, out by 1 the next day. So we really try to focus on service. So we are an MGA, so we do all the things that you would think an MGA does, from creating the programs. If they're not brought to us, we'll create the underwriting guidelines and whatnot for the program. We underwrite, rate, quote, bind, issue, endorse, and renew, and we always report to our carriers. We integrate with the carrier's system and the agents, as well as our online portal. Sometimes we handle the claims, and we always do the marketing and training for the programs. These are our programs, kind of in a nutshell. So the Safety Tech program is a technology E&O product. We've had it since '95. So they aren't always just the software companies and internet companies now, but they include cloud services, artificial intelligence and machine learning, all kinds of craziness, everything that you see every day. Aspire A&E for architects and engineers, Harbor Guard for marinas and boat dealerships, miscellaneous professional liability, Element for the green energy industry. We do personal lines, which is home, auto, boat, and high value home. Commercial lines, which is BOP, comp, auto, bonds, and that type of thing for small business, middle market, and we also have some national accounts. And if it falls outside of the commercial or personal lines, we also are licensed as surplus lines carriers in every state, a surplus lines agent in every state. So we can automatically submit that business to our surplus lines department so they can get you a quote on some hard to place stuff. So next, I'd like to introduce Joshua Wilcox, Claims Solutions and Analyst for the Hartford, to take us through the presentation today. And
Thanks, Dwight.
All right, there you go.
All right.
I love technology.
All right. Dwight, can you see my screen? Can you see the first
I can.
page of the PowerPoint? Okay, good deal.
I can. Looks great.
All right, thank you. All right, give me 1 second. Okay, can you still see, Dwight?
I can, yeah, looks great.
Thanks so much. So hello to everyone. Like Dwight had mentioned before, so I work for the Hartford, and Dwight, just to kind of give you some context, Stuckey is one of 250 agents countrywide, one of only 250 who actually have someone dedicated to their agency for all things claim related. And so that's how Dwight and I get to work together. Because of our relationship, I support Stuckey. I'm also his point of contact for anything that would come up on any business that you guys place with us through his agency as well. So thanks for your time today. I don't want to, I will try to keep this. Obviously, I know that your time is very valuable. I don't want to keep you away from your desks, but just wanted to, as Dwight and I are looking through kind of what's going on, out there in the territory, and things that would be helpful. What we try to do is identify just some different areas that we could highlight for you and try to help you as you go out and try to get your own business. So today, I want to talk about workers' compensation and just investigations in general. So having run, I used to run a Hartford regional office for several years, and we started seeing some trends, obviously, around small commercial and some of the things that come up through the investigative process. And so today, over the next 10 minutes or so, I just want to point out some highlights. I would like to say that Stuckey can send out this PowerPoint that I've included. It is Hartford legal approved. We're welcome to let you use it. Happy to let you build a roadmap for your own customers as well, whether they're with Hartford or not. I think there's some good information in here. So the first thing I'll go to is really around, I think, is kind of the pre-qualifying stage of workers' comp. This is just really an area of opportunity across the board, I think, for all small commercial customers, is that really understanding what the makeup of that operation is. I will tell you here, and obviously I'm not going to read from the bullet points, but we will find at times that when we pick up the phone, we get a claim, it comes through the door, and we want to dive into it and start to understand, all of the details around that. We will, at times, we will call the employer after we've gotten a statement, let's just say from the injured worker. We will pick up the phone to call the employer, and we run across a handful of claims where the employer did not think or did not intend to provide coverage necessarily. They didn't think that they were responsible for that. And I say that these are in situations where you got a temp worker, right? He's an independent contractor, if you will, or at least we think that he is. We have somebody who comes out and is doing some type of barter work. They're cutting the grass and they're getting the benefit of a service for free, but it's a trade-off, right? So there's no money exchanged. This could be the scenario as well if we're talking about volunteers, depending on what kind of company you have. Same thing with interns, maybe interns that are not paid necessarily a paycheck, but they're getting experience. And so I say that only to bring an awareness to when you're talking through with your customers on how their operation works, what are their expectations, what does their employee base look like. You may want to challenge them on some of these things, because we've gotten several claims over the years where the owner, the CFO, the president, whoever it is, however they're structured, did not truly intend to provide insurance, and they didn't think that they were exposed to that. So what I would say is every state's different, obviously. And so you want to obviously check on the regulations for your state, but it's just something to think about and to make sure that they think through that, because the last thing we want to do is have a big exposure out there that they thought that they were covered for, and they end up not being, or they end up being on the hook for a $500,000 claim that they thought that the temp agency was going to take care of through an employee that they got. So that's kind of the first thing. I'd like to I can pause there for a second. I just want to kind of bring an awareness to that, because it can be a really difficult situation once the claim's been turned in.
Josh, we just had a agency meeting with the Hartford, and I think it was the claims department that said that 65% of insureds are either uninsured, underinsured, or improperly insured. And I think the agents that are tuned in here, a lot of our agents, the way that they ask questions, and they submit accounts and things. We know who they are. That they're just on top of some people are on top of it and some people are not. But it's definitely worth challenging the customers.
Yeah, and if you guys have any questions or you run into a weird situation, something you want an opinion on, obviously you guys can reach out to Dwight, and Dwight can reach out to me directly, and I'll be happy to, to look at a scenario for you if if you just need an opinion or you need a second set of eyes on it.
Yeah, I have a question that is specific to this coming in. It's
Sure.
How are 1099 workers covered under workers' comp?
Yeah, so 1099s obviously, and I hate to give you the legal response with a disclaimer, but so 1099s in general, they are viewed technically as independent contractors, but sometimes the states, and depending on what jurisdiction you're in, they will then look to see, who directed the employee. Did they have their own supervisor that was on site? Were you 1099 in a group of people, and did they have their own leader on site that was doing a task? Where were they hired? What's the paperwork look like? So there's a lot of tentacles to it. But in general, really the thing is you want to get a waiver if they're not supposed to provide the insurance. And so if you can get something signed that says that, you are supposed to carry independent coverage, that's really going to hold more weight than anything else, if that makes sense. Yep.
And I think it's always good to get a evidence of coverage from the contract workers if you can, right?
Absolutely. Especially in trades that we know are the likelihood and the severity is typically, much more severe, construction and some other trades. So, yeah, you just want to protect yourself, and getting a waiver is always the safe bet.
Right on. All right, great.
Okay. So I'll toggle forward, and I want to, out of respect for your time, I just want to bring some attention to. Hold on one second. Sorry, Dwight, your pop-ups in my screen I couldn't read. So I'll go over here to when an injury occurs. And so what I try to tell people is that what we talk about all the time is you can't really leave it to chance that everything will work out, right? So hope is not a strategy. And so I think that one thing that we try to do, and what we try to help our customers with, is making sure that there's a process in place, so that whoever that frontline leader is, right, whether it's a foreman or it's a general manager, whoever it is, that there is a process in place. And so we see it especially in small customers, small commercial type business, where obviously an individual wears multiple hats. So insurance could be in, sometimes it's HR, sometimes it's in, they may not have a risk management department, sometimes it's in, it's in accounting, it's in finance. And so regardless of that, what we try to do is just emphasize and tell them that, you all potentially have a liability out there when you leave it to chance that, that everything just falls into place and it works out great. So what we try to do here, and I'll try to get through this quickly, but just some things to remind them of, is that through that process, you want to teach them how to secure the site. And if you go down to that last bullet point as well, you'll see, so part of that securing the site means, calling out the authorities, if that's police or fire, if it's serious, making sure that you get a diagram, you get a picture of what it looks like right then when it happened. And so some of these are going to be, not just work comp claims, but you're going to have GL as well, depending on the environment. And so, the better we document and preserve the actual situation, the better defense we can potentially provide that allows us to, essentially pay what we owe, nothing more, nothing less. And so also too, a couple of things to think about, through that process, you want to give the individual who's responsible for it a roadmap and say, here, secure the scene, call the right people, document, get an actual statement from the individual. Written is great because that will be preserved. If you can't get that, then, give us their information so we can get it for you. Also secure names and contact information for witnesses. Were there security cameras? Was this somebody else's location, right? It may not be yours. So just things to think about. And so I tell you that only to try to emphasize that, going to our customers, and obviously the ones that I've worked with in the past are, and you'd be surprised, even sophisticated companies, with people who you would think we're knowledgeable in this area, there's always opportunities. And so we always feel like it's worth mentioning, especially at renewal time, to sit down and say, what's your process? What do you do when an accident happens? And so it's just really making sure that that you've got that, and they may not ever need it, but you'd never know how many surprising claims where somebody never thinks they're going to have one, and all of a sudden, they turn it in, and it ends up being $100,000. And so it's just the taking the time to prepare and educate the leaders through something like this, whether it's Hartford document or not. It's going to help down the road, right? It's going to help with employee morale. It's going to help with overall cost containment, and really essentially require us to pay what we owe, nothing more, nothing less. Another thing too, and I'll get through this with just a couple more talking points. We can open up for questions. But another thing too is when we're doing the onboarding with customers, to tell them, here's how an investigation should be processed. The other two is educating them around, you're going to be working with an adjuster. This is going to be their role in the process, and this is what we really need from you. And so it's making sure that they've connected the dots between understanding, because sometimes the individual is like we talked about before, they're wearing 5 hats. This is just something that somebody put on their desk and they're responsible for it. So it's not, I'm always amazed at the fact that, some of the individuals who are involved don't necessarily even understand what the long-term impact is to the company, and the potential, impact of the dollars and the morale and everything else that are impacted, across the board. So anyways, so food for thought, it's making sure that that individual understands too what the adjuster's role is and what they'll be needing from them, and that as we're able to work together, that synergy allows us to, get that individual back to their pre-accident condition, and potentially overall save the company money as well. So it's just bringing an awareness to that so that they know who to call and what's going to be expected of them as they participate through that claim process together. And so there's some preventing injuries things in here, and I won't go into them. You're welcome to use these to look through them. And Dwight, that may be something we can talk about later around preventing injuries going forward around risk engineering. But I did want to show you one thing here. We talk about the long-term impact of claim cost to a company. And so this is actually, and I wanted to share this kind of in closing, just to give you a real visual effect. Now these are statistics from Hartford from across the board. So we took every workers' comp claim that we had for a 5-year span, right? And we looked at this, and we took the average and the financial impact of them. And so as you're going out and talking to your customers and you want, true statistics, this one has always been staggering to me, and it's a reason why, I usually will point to this and simply show them that, look at the long-term impact of delays in reporting, of not handling that process correctly. I mean, if you look at this, 1 week, 9% cost increase, 21%, 24%, and 39%. And these are claims that are all in across the board. These are based on, tens of thousands of claims. And so the sample set is statistically valid. That's staggering to me. And, depending on who your buyer is, right, who your decision maker is, if it's a CFO or if it's a president who has to sign off on the financials, 39% is significant. And that can have a tremendous impact to a company who's not used to having claims. So just want to put that out there. Wanted to arm you with that information, and also just make myself available through Dwight if anybody has any questions or needs anything else.
Right on. Thank you, Josh. Appreciate it. And it's something that, honestly, I don't think small businesses or agents really, it's certainly not discussed enough, because it's a little touchy. I think, I think generally speaking, people think that in some way insurance carriers are here to avoid paying claims. And I don't, I think you use the term, what we owe, nothing more, nothing less, a couple times. And And that's exactly what it is, basically to indemnify an insured, right? And to help, you know, pay for the claim and get the person, back to work. But it also can, like you said, have a huge impact on the company, and the role of adjusting is a huge one. And if you can, kind of change the subject a little bit from, premium. Obviously, premium is very important, and saving money is important. Being competitive on a quote proposal is important. But another part of the service is just to help limit the exposure and contain cost without really limiting, the payment or, the job that, the insurance carrier is doing. So I love that. Thank you, Josh. Appreciate it.
Yeah, absolutely. No, thank you. Thank you for your time in the group today.
So we have just a couple underwriting questions first, and I'll try to answer a couple of them, but
sure.
What is the workers' comp appetite for roofing is the first one. And I can tell you, Hartford, I don't believe Hartford writes roofers.
We do not. We do not for the most part today. Correct.
Yeah. So we do have a couple carriers that we're working with that may look at them. But, a lot of the times, some of the things we're talking about today is containing costs and things really work for that industry in particular, because a lot of the times they have a higher mod. And helping contain costs obviously brings down that mod. So let's see, what's the appetite for new business? A couple of appetite questions. New business, cancel for non-pay, and another revenue threshold. New business appetite, we can write, depending on the account and the industry they're in, we can definitely write workers' comp for companies that are new in business. Cancel for non-pay, we can also look at those as well. And the revenue thresholds, I'll send a thresholds sheet out, but basically it can be up to like 50 million in revenue, but that's for some of the professional classes. So I'll send that out to everybody. And here's one that you might know, Josh, and maybe help me with.
Sure.
When are they going to be excluded? Can be decided by the owners or depends on the insurance company. So I think what they mean by that is when can 1099 employees be excluded and when are they included?
Yeah, so I think we'd have to look at, obviously, each state has different, workers' comp stipulations. I mean, the 1099s would be, essentially, if you are truly, the way I think about it is, it seems to be a lock whenever, let's just use the general contractor example. You're not actually overseeing you're a true GC, right? You're subbing out a part of that process. That to me is when those employees are truly excluded. I would get waivers as well. So it really depends on the activity that they're involved in. If you're bringing somebody in to do paperwork or somebody to crunch numbers because it's tax time, and they come and sit in your office and you're telling them what to do, they're using your computer. Those are the things that get a little gray, and so that's when I think we probably need to go to the state guidelines to say how does the state view this? Do they view this as your employer or not? If that makes sense. So if it's a situation where we're directing the employee and they're doing work directly for us, something that we're overseeing would be a little bit different than if we're subbing it out and it's a component of a job or a process. I know that's probably not, that's a little generic, but if you want to email Dwight, I'm happy to try to get the regulations around the state for you if you want to talk about that further. Yeah,
but basically, I think it does not depend on the insurance carrier's way the adjuster woke up in the morning, right? It's
correct.
Yeah,
shouldn't be.
So
yeah.
I'm
sorry, Dwight, if I didn't answer that clearly. Maybe I misunderstood the question.
So I think one of them is, can they specifically be included and excluded? Can the owners decide, or does it depend on the insurance carrier and, like, how they view
I
things?
got you. Yeah, I mean,
Yeah.
I think that for us to decide that would be a conversation that the owner needed to have with whoever he's getting the subs from and say, no, you're required to have your own insurance. You need to sign this waiver. You're not covered by us. And then if they try to come turn a claim in, we could then take that waiver and the documentation and say, no, 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 you weren't included in the insurance program. You need to go elsewhere because you said you would provide your own insurance.
Yeah.
Yeah.
Right on.
So that would aid in our ability to deny the claim appropriately.
Yeah. Okay. Well, thank you. Appreciate your time, Josh, and everybody else's time. I think really the only other thing I wanted to make sure everybody knew is I will be sending a link to the recording of the webinar and the PowerPoint presentation as a PDF. Thank you, Josh, for letting us know that it was also approved by legal. That's awesome.
Sure.
And we'll get the appetite guide out and the threshold alongside of those other documents. And if anybody has any questions or submissions that they'd like to send in, here are the commercial lines underwriters, professional lines, and the personal lines guys. And as always, I'm always available. It's Dwight@Stuckey.com, and my extension is 122. So with that, thank you everybody for attending the Hartford Claims webinar hosted by Stuckey & Company, and thank you, Josh, for presenting.
Yep. Thank you. Have a good day.
You too.